It's 2nd of April. It's about 10 past 9 here in Asia this morning. US markets recently closed, and we've been talking yesterday in particular, I mentioned, and also end of last week about this end of quarter. There was a view certainly amongst more professionals that a lot of the rally in equities was possibly an end of quarter issue. I spoke about rebalancing and that kind of thing yesterday. So it was always going to be interesting to watch the equity market open on the first day of the new quarter. And perhaps unsurprisingly to a lot of people, we saw quite a sharp sell-off in equities, down by around 4% around the globe. So today is really a classic risk-off day. If you look around, and I talk a lot about using correlations and putting the picture together. So it's quite a classic risk-off day today. Equities are a lot weaker, bonds are firm, gold is firm, dollar yen is lower. So if you look at that, it's quite a simple, straightforward kind of a day in that way. And to put that picture together and figure out what we're doing today and where the markets are. I did say that I thought that there would be more volatility ahead. I didn't think this was the end of it. It didn't look to most professionals like this was going to be anywhere near either a bottom or the end of the volatility. There's still so much uncertainty out there. It looks like the US handling of the virus so far is pretty sort of scattergun, really. It doesn't look like there's a lot of coordination happening, and certainly state by state there's a lot of variances, and I think it's looking quite serious out there, and really feel for people over there, and certainly in parts of Europe as well. So there's a lot of uncertainty. We're still only at the early stages of this of this virus in the US and Europe. So there's a lot of uncertainty to come. I don't see that the volatility is going to end anywhere soon. And ramifications going forward in residential mortgage markets in the US and things like this, because people are not working and not able to pay their mortgages. These ramifications are going to keep happening as we go forward. And sure, the Fed are probably going to come in and get involved in a lot more of these markets now, but still there's uncertainty about how it's all going to pan out. So a classic risk-off type of day. Equities down by about 4%. And I think this is what's going to continue to happen. So I don't think there was a possibility that we haven't even seen the lows in equities yet, but certainly the volatility will keep going. So continue to try to put that picture together, look at different markets, look at the correlations, and then try and get an idea of what's happening. And that's how we can start to put forward hopefully a more robust view of what's happening in the markets.